Hello and welcome to this week's US Stock Market Report. I'm Dale Gillham, Chief Analyst at Wealth Within. This week I'll be discussing how currencies impact the stock market, and then I'll dive into the Dow Jones and this week's stocks of interest. Now before we jump into the report, I just wanted to share with you that this month our Talking Wealth podcast was voted as the number 3 stock market podcast in the world by FeedSpot. Now, this is pretty exciting. So if you're not already subscribed to the Talking Wealth podcast, visit iTunes and search for Talking Wealth. Also, I wanted to mention if you have any thoughts on investing or trading, comment below and be sure to subscribe to our channel to keep up to date. So let's get into this week's report. Last week I discussed the factors that affect currency prices. So if you haven't watched the video, I recommend you watch that first and then come back to this one. Now that you understand what causes a currency to rise and fall, I'm going to share with you how currency prices play a large role in the stock market. To appreciate the relationship between currencies and the stock market, you need to understand currency pairs, which is essentially the exchange rate between two currencies. For example, if I want to exchange one Australian dollar for one US dollar, and the exchange rate is 70 cents, I would receive 70 cents US for my Australian dollar. If on the other hand I have one US dollar and decide to exchange this for one Australian dollar, I would receive $1.42 Australian. So the currency pair in this case is the Australian and US dollar. As I discussed in my previous recording, exchange rates will be heavily affected by the supply and demand for that given currency. So keep in mind that while you might be investing in only one country, that country will always be exposed to international markets. Today more than ever we live in a global world, and this has made it easier for companies to operate all around the globe. Companies that export goods overseas benefit from weaker currencies, as they will receive more money for their goods. Let me explain. Around the world, most exports are transacted in US dollars, which include commodities and other resources. Iron ore, for example, is always written in US dollars, regardless of where it's being exported from. If an Australian resources company wanted to sell iron ore to the US, and the Australian dollar was weaker against the US dollar, then when the company exchanges the price of the goods back to Australian dollars, they would receive more money, given the US dollar would buy more Australian dollars. The opposite is true if the Australian dollar is strong and the US dollar is weaker. Companies will receive less Australian dollars. Companies that import goods benefit from a stronger dollar, as they can buy more goods for a lower cost. For example, manufacturing companies can buy more components for less cash. Therefore, a high exchange rate means more buying power. On the flip side, a lower exchange rate means you can buy less. You could also look at international tourism, as a country with a low exchange rate is more attractive to tourists, as they'll get more bang for their buck. So international travel companies will benefit from an increase in business. That said, if exchange rates are high, this discourages international travel, and so more people will travel domestically, and so companies involved in domestic travel benefit. Whilst my explanation is at a relatively high level, this is how currencies impact the stock market. So how can we use this information? Well, as a starting point, I recommend you look at the top 100 stocks on the market to scan for companies that are heavy exporters and/or importers, and make 2 separate lists. Then look at the exchange rate to determine if it's rising or falling, to identify stock prices that are likely to rise and those that are likely to fall. Now before we get into this week's stocks, I just wanted to announce that I'm going to be doing a live online session that's going to be totally free for subscribers to this channel. So what you need to do is hit that subscribe button now so we can invite you to that online session. I'm going to be talking about the world markets, I'm going to be talking about stocks, and I'm going to be answering all your burning questions. And I'll give you all the details next week, but you do need to subscribe to this channel. Now let's get into this week's stocks. Alrighty, on your screen right now is a monthly chart of the Dow Jones industrial average, and it's one that we've been looking at for the last few weeks, and I'll just zoom that up a little bit. And these are the sorts of things that, again, I'm on my computer in my little sound studio, and exactly the same studio I'm going to be doing that live session on that I mentioned earlier in the report. So again, just hit that subscribe button. And you'll be invited to it. I'll be bringing up live, I'll be moving around, chatting with them. You'll be able to ask me questions while I'm doing it, look at stocks. I'll be looking at sectors, so you'll see all these different markets across the top, the FTSE, the DAX, the Hang Seng, the SEC, the Straits Times. These are all sectors within the Australian market, but I'll be looking at US markets and different things there. And just really where I think markets around the world are going, and looking at different stocks. So, I'll be looking at whatever you want me to look at. So remember, hit that subscribe button. But looking at the US market, or the Dow Jones at this point in time, and we can see here, if I just get rid of that, you can see the bar there. Again, it made an all-time high it was only a couple of weeks ago, and now it's fallen away, and everybody thinks the sky is falling. But you can see here from that open, for October, so October to that close, it's only down 7.18%, or 7.14%. I'm thinking, as I've been saying for a little while, I think at least that level, 24, but probably more likely to go down to at least here to 22,000. Now, to me, the bottom end of it will be here at absolute most, it would hit 21,161 or higher. So to me, that's really where a crash is 25%, but I'm more likely thinking that the market will find some support sort of between 21 and 22. It may break through this a little bit, but that's where I think the Dow is heading. But it won't be any sort of mass crash, I don't think. I think what we're going to see is maybe a month or 2 months sort of down, a little month up, and then another one folding over, and probably not too dissimilar to something like this, where we've seen it's gone down a little bit, gone up a little bit, and then folded away. And you can see here how this one, if I just drag this out and we drag it down to that bottom, at one stage it was down 19%. So that was May 2011. So I'm thinking maybe something like that might happen again. Because at this point in time, I don't think there's big reasons for the Dow crashing, as the big media out there is saying, simply because the economy's strong. I mean, if the economy's strong, it can't crash. That's pretty much as simple as that, because companies are making more money, people are being more employed, people are buying more things if they're got more employment, or it's more money floating around. The market really can't crash. It's just a normal a movement down. I've written an article I'm sending it off really in the next half an hour or so to my publicist in New York, and it's going in an online publication called Value Walk, which I've written a few times for. Value Walk, I think valuewalk.com. I've written for them a few times, so it's going in there. It's really why the market can't crash. You'll see what I'm talking about. But at this point in time, I don't think there's really anything to worry about. Now, I'm going to go into, I thought, well, what stocks am I going to look at today? Because nobody had asked me for any US stocks. And so what I thought I did, I just Googled the Dow Jones and stocks, and it said there was an article or a website came up with the biggest winners and losers on the Dow in the last week. So that's really where I want to start off, and these are all Dow stocks. These are all the top. This is Dow DuPont, and the website said it was down. I think it was a website called marketwatch.com, and that's all it was. And they reported it was down 9.5% last week. The change in 2018 through to October 26, it's down 27%. So that's DuPont. So we can see this big move down in here. So if we go and put our little tool on here and look at October, you can see here it's down 19% for October there, so 20.51 at one stage. But what I want to discuss here is the big stocks. You'll always see a changing of the guard, I suppose, is the easiest way for me to say things. If a market's going to come down, you'll see the big stocks come down earlier. They'll start their move down, because what's happening is the masses believe that the big end of town is becoming overpriced. So they slow buying on that, and they start finding value elsewhere. So they'll start finding value outside the 30 stocks in the Dow or the top 50 on the S&P. They'll start looking at smaller stocks that are cheaper in their mind. So not necessarily a $60 or $70 stock or a $100 stock. They'll look for a $20 stock that they believe is
cheaper. So you'll start seeing more of those lower cap stocks starting to move up and some of the bigger ones starting to move down. And we can see here that this is January all year. This stock's been pretty much going down most of the whole year. Now that sort of tells me, even in 87, when you crash, you could see stocks falling, big stocks falling from 6 to 12 months earlier. They started generally folding over and moving down. So they will tell you, these are your signposts. But the inverse is also true. When the end of a down run's happening, then people are going for safety. They're going for the big stocks, so they'll start moving up first. While the smaller or mid-cap stocks will keep falling, the bigger stocks will start rising, so they'll give you a signal. So at this point in time, where is Dow DuPont going? And it is a big stock. It's been around for a long, long, long time, but you can see here, generally overly bullish, isn't it, this stock? And if we just use just a basic trend line on this from that 2007 low, if I just click a lot on here, you can see it just travels along that sort of line. Now this is not a proper trend line, so I wouldn't normally draw a trend line. I'm just doing what's the momentum like. But I would expect it's probably had most of its fall already, and it's probably going to find pretty much some support and maybe rise up a bit soon. So let's put this on, and it's fallen down. Let me just do the pricing, right? So where is it? Somebody's reverse my prices. There you go. So what I was talking about before, that 38.2% level, it's nearly there. So I'd say I'd probably go into that maybe and then start to move back up again. And it could be a nice little opportunity from there. Next one is 3M Co. And again, similar there, looking at that, it's been falling since January this year. So whereas the Dow made a new all-time high not too long ago, it's only a couple of weeks ago, the S&P 500 made its all-time high in September, but it was only near the end of September. So to me, when these two big markets are making all-time highs, and yet some of the stocks that in them, have been falling for most of the year, then how does that actually happen? So that's what, as I said, what I was explaining, what I was talking about before, with there was more value in some of the smaller caps for these people. So that's when the money was flowing. These things have been falling reasonably well. So if I get onto here, you can see here, this one's fallen 28.8%. Again, why we use stop losses. So if I go and put my trendline tool on here, and we go back to that sort of low there, you can see here that that's roughly that angle that this thing moves on. It sees it moves up and around, it keeps coming back to it. So it's pretty much very, very close to that right now. So again, these are the sorts of places that I would look for value on the marketplace, because that's a huge run on that stock. Talking about 535%, but it's just moving back a little bit, getting some value here. And again, it's gone and done it again, hasn't it? Where is it? Reverse the prices. And again, this one's near that 38.2% level. So again, it might drop below that little line and start to move up again. Because remember I talked about on the Dow, I thought it might have a little bit more further down and then move up to challenge its all-time high, then float down again. So these companies may be the ones bringing it up. So that looks pretty good. Goldman Sachs, another big one. I think Goldman Sachs is in the top 10 on the S&P, I think, from memory. I'm trying to remember. But again, it's been going down a little bit later. March this year it started falling away, but it is falling away. A little bit different in terms of how it's been unfolding. But if I do put my little line on here, you can see here that that's sort of an angle that this takes over. It moves up and around here. So, but at this point in time, it is falling away. If I do, not that one, I don't want that one, do I? I want that other tool. So if I put the same tool on here again as I did, that was wrong tool again. Where is it? That's the one I want. If I click on this, click on here, and again you can see it's gone through that 25. Let me go back here, and I've got to set the settings right on this, don't I? Okay, let me go here. There we go. So it's gone through that 25% level. So it probably would go down a little bit further, this one, maybe because it started a bit later. So it may go a little bit further down to this sort of level, but that's where I probably would be heading at this point in time. But it has filled some price analysis in terms of when stocks move, they move in price, time, and pattern. And when price, time, and pattern line up, we get a turn in the marketplace. So to me, I always have price targets, time targets, with stocks, and then just wait for a pattern to happen to give me a signal and give me that confirmation that a move's going to happen. So trading on confirmation is really, really important. Here's Chevron. Here's the last one I'm going to cover here today. But interesting, different ball game again here, isn't it? It had, again, January high, but this bar hasn't made a lower low than the previous one. It went down for 1 month and it's been sideways this show. Right now you probably think it's going to break through that low there and come out the bottom of that $108.2 low and keep moving down a little bit more. But it's generally been bearish as a big company. Again, looking at this, you see there's its all-time high back in July 2014. It retested it. This wouldn't surprise me if this thing started to fall away a little bit harder. Let's see if we go back. So let's go back. So there's your 2008 low that we had before, and you can see it's a big different pattern than what we had on those other stocks. So if we go and put this price retracement tool on here to that all-time high, you can see how this fell all the way down through this 75% level and then bounced right up again. If we take that, and let me delete that. Ooh, don't want that, do I? And I put it on the shorter range from 2015 through to here. You can see now it's down to that 38.2%. I'm thinking this will probably move down to that 101 level before it will find some support. But it'll be interesting to see how bearish it can be, because right now it might even move down to where that my pointer is now, around $85, but let's see. But right now this wouldn't be the stock I'd be looking at. I really would be looking at Dow DuPont. As I said, it was down, according to MarketWatch, it was down 27% through to the 26th of October. 3M was down, it says 21.4%, Goldman Sachs down 16%, and Chevron only down 10.9%. So they were the 1, 2, 3, 4, the top 4 that they had listed there on the website. But it is interesting. I also find a lot of those websites, I mean, they're just information. They don't teach you how to trade or what you should be looking at. This is where the charts are, and this is where you need to know what you're doing. So if you want me to look at a stock, as we always say, type below and have a look at whatever US stocks. Please don't put any Australian. If you're an Australian, don't put Australian stocks on this one. Put it on the Aussie one. But US stocks for this one only. And if you've got a question, please just post it. That's fine. But remember, hit that subscribe button right now. And we'll talk to you later. Good luck, good trading. Bye-bye.
What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on SoundCloud and on our website. Now they're jam-packed with valuable information which will help you elevate your trading. Now if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.